Very good morning, guys. Warm welcome to the best lectures of FM, SM, and Audit nationwide. Yes, guys, welcome to our YouTube channel. Yes, guys, today we are very happy, we are very excited, we are very thrilled because we are bringing to you India's best revision lectures of Audit. And yes, you heard it right. All the students who don't understand Hindi, who understand English a little better. Yes, these lectures are in only English. So for all the South students who were requesting since a long time, only English, only English. Yes, guys, we are there today. Okay, we are starting the only English revision series of Audit. Get ready to enjoy the best lectures of Audit in only English. Okay, what will be there in this revision series, in this revision marathon? Number one, world class revision lectures for all 11 chapters of Audit we are going to cover. Number two, okay, we will try to explain all the concepts. Okay, every concept will be covered. Number three, wherever possible, wherever we need to learn, we will make you learn in the lecture itself. Okay, of course these will be revision lectures. Okay, so you have to keep in mind that. Don't worry, we will work very hard that this is the best marathon for you as well and me as well. Okay, sir, from where are you going to do revision? Can you explain? We will do it from our magic book. Those of you who don't know, since many years this book is there. It's a summary book. We have compressed almost entire Audit in roughly 80 to 85 pages. So this is the magic book which covers all 11 chapters in around 80 to 85 pages. From this we are going to do. We don't have any soft copy of this because these are encrypted book. Plus we believe only hard copy brings hard result. Soft copy brings soft result, and we want hard result. The more you write in the books, okay, more you make it dirty, there is a high chance of result. So only hard copy is available at printing cost, but there is no compulsion. If you feel it will be fruitful to you, useful to you, you can buy. Otherwise ICAI module is there, not to take attention. Okay, so yes, guys, all the best to you, all the best to me. I hope, I wish, I pray that we shoot the best lectures of India. So you, me, both can have immense benefit out of this. What do I want from this revision series? Watch it as many times as possible. Okay, it's almost going to be a 20-hour, 19-hour, 18 to 19-hour revision series it is. Watch it as many times as possible. Okay, one time, two time, I give you absolute assurance. More number of times you watch, more your confidence will keep on increasing. I bet you on this. Okay, so make the best use of it. Okay, that's the only thing I want to tell you. Okay, do like the video so it reaches maximum number of people. Only if you like, you have to like. Don't like just as it is. Okay, and nothing as I want to tell you, nothing else. Okay, let's start right away. Today is the day of chapter number 1. Okay, what's the name? Nature, objective, and scope of audit. What is the meaning of nature of audit? Nature basically means what's the meaning of audit? Advantage, disadvantage, features, okay, all such things are in nature. What is the meaning of objective? Why am I doing audit? Okay, what's my objective of doing audit? Scope, what it covers, what it doesn't cover. In audit, what are things are covered and what things are not covered. Can we start? Yes, sir. Let's start right away. First is definition. Audit is independent examination of financial information of any entity. Let me break word by word. Word by word. See, it will take little time. 15-20 minutes I will build the base. So it will take time. After that we will go smoothly. Okay. What is the meaning of independent? Independent means auditor should be nowhere related to me. It should be completely different. Let me take simple example. If I do audit of my dad, okay, my dad has a 3-star hotel. If I will do audit, it is bound to be I will do biased audit. If I find any GST mistake, okay, that this mistake you have done, that will say, hey, first who came? CA came or you came? I said I came. And who gave birth? I said you only gave. Barabar, you and mom together. Then nicely audit. What is this GST, PST? Okay, our CA comes later, in dad no GST. and I have to listen to my dad. I cannot be independent. That is why auditors should be independent. Why? There are so many people who invest in company based on an audit report. If auditor is not independent, if auditor is not biased, we are cheating 30 lakh people who invest in Reliance. Guys, today 35 lakh shareholders are investing in Reliance based on one report. Okay, they feel the Reliance has nothing done wrong. Auditor has checked everything in detail, given reasonable assurance. But if auditor is related to Reliance, auditor is under influence of Reliance, auditor is under some pressure of Reliance and gives biased report, okay, then auditor is not wrong, but 30 lakh people are cheated because they believed that CAs are independent, CAs verify everything, CAs have full knowledge. Are you clear? So number one, auditor should be independent. Independence has two aspects: independence of mind, independence of appearance. What is the meaning of independence of appearance? Appearance means from appearance he should be independent. I should be nowhere related to the company. I should not hold any share of company. My relatives should not work in a company. I should not take loan from company, nor should I give loan to company, nor should I have business dealings with company. Thousand rules are there, but that is all in company law. In simple, clearly I should be independent. No one can tell I should have any relation with the company. My wife should not hold shares. I should not hold shares of Reliance. Independence of appearance. What is independence of mind? State of mind which allows me to form opinion on my own without being affected by other. Such mind which tells me I am not under pressure of anyone to work. I will work on my own. Tell me when pressure will come. When I have only one or two clients. If I have only two clients, okay, if they go away, my belonging, my survival will be very difficult. Okay, so that time it could be that I'm not exercising independence of mind, but it's okay. I will get another work. Okay, not only from appearance I should be independent, I should be independent from mind also. Let me take parallel example, you will understand. Many times in class, okay, through appearance you are saying that you are understanding, but from mind you have not understood. Sir will ask, did you understand? Yes, 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 fully understood. This is independence of appearance. In appearance you are telling, but from mind you are saying, was teaching, did not understand anything. What is this bakwas teaching? Are you clear? So from mind you are not independent. So tell me, auditor should be independent from mind or appearance? Both. So one word I explained. Audit is independent. What's examination? Checking. Now you will tell me what to check. Shall I check employee efficiency? Shall I check fixed assets are working? No, only financial information. So audit is independent examination of what? Financial information. Now you will ask me next question. What is financial information? It is financial statement and books of accounts based on which such statements are there. Books of accounts and financial statement. Next question. What is financial statement? Very simple. Five things. Balance sheet, P&L, cash flow. Balance sheet, P&L, cash flow. Statement of changes in equity, notes to accounts. I hope you know this. Statement of changes in equity, notes to accounts. One last time. Balance sheet, P&L, cash flow, statement of changes in equity, notes to accounts. So one last time. Audit is independent examination of what? Financial information. Whose? Of any entity, whether profit oriented or not. Irrespective. What is the meaning of profit oriented? Be it a profit making company Reliance or loss making company Paytm, we will audit all, profit oriented or not, irrespective of size or legal form. Or let any size, be it as big as what? Tata, or as small as what? A barber shop, or as small as what? Tea shop. Everyone's audit. Coffee shop, irrespective of size. Legal form. What is legal form? Sole proprietor, partnership, HUF, LLP, company. Anyone, sole proprietor, partnership, HUF, irrespective of size or legal form. When such an examination is done, what is examination? Checking with a view of expressing an opinion. Why am I doing audit? For time pass? No, to give audit report. What is expressing opinion? Audit report. Four types of report are there. Of course, that also we will see. Okay, so very simple definition. Three times we will speak. Audit is independent examination of financial information of any entity, whether profit oriented or not, irrespective of size or legal form. When such an examination examination is done to express an opinion thereon. Shall we speak the last time? What is audit? Audit is independent examination of what? Financial information. Whose? Of any entity. What is any entity? Whether profit oriented or not, irrespective of size or legal form. When such an examination is done with a view of expressing an opinion thereon. Small break, 5 seconds. Okay. Audit is independent examination of what? Financial information of any entity, whether profit oriented or not, irrespective of size or legal form. When such an examination is done, why? With a view of expressing an opinion thereon. Okay, thereon means what? On financial statement. What is opinion called? Audit report. Okay, come here now. Next, overall objectives of independent auditor. How to remember? As per SA 200. So OO is there. Here also OO is there. 200 has double O. Here also double O. What are the objectives? After this, our base building will be over. Number one, auditor will give reasonable assurance that the financial statements are free from material misstatement. Not understood. What's the main objective of audit? To get reasonable assurance that the financial statements are free from material misstatement. What do you mean by reasonable assurance? Nicely listen. Reasonable assurance is a high level of assurance, but not absolute assurance. Okay, word by word. I want to get reasonable assurance that financial statement don't have mistake. Okay, but what is reasonable? High level of assurance but not complete assurance. Now you will ask me, why shall I not give complete assurance? Okay, 4 questions are there. All 4 have one common answer. One more time. Okay, why do I give reasonable assurance? Why audit risk can never be zero? Why auditor gives true and fair view and not true and correct view? Okay, because there are limitations in audit. See, audit also has limitations, so I can never give full assurance. One last time. Okay, 3 questions, 1 answer. Number 1 question, why I give reasonable assurance and not absolute? Second, why audit risk can never ever be zero? Okay. And third, why I give true and fair view and not true and correct? Why? Because there are limitations. What are limitations? Nature of financial reporting. Our financial reporting is based on lot of judgments by management, and these are subjective decisions. Now you will tell me, what is the meaning of word subjective? Changes from company to company. Our financial reporting is based on lot of judgments, and these judgments are subjective. Changes from company to company, management to management. Let me take 5 assumptions. Provision for bad and doubtful debt, useful life of asset, rate of depreciation, provision for warranty, impairment loss. Now these are based on judgments which will change from company to company, management to management. When you are preparing financials only on judgment, how can I give complete assurance? Okay, you are preparing on judgment. On judgment, never ever absolute assurance is possible. So our financial reporting is based on assumptions, so I can never ever give complete assurance. Second, future events. See, going concern, I am saying business will be valid for unlimited number of years. It will be valid, but future is in no one hand. Future events or condition may cast significant doubt on entity's ability to continue as going concern. What if government will ban plastic tomorrow? Government will say ban petrol tomorrow. Okay, government will say compulsory electric vehicle. Many companies will go insolvent. I can never give absolute assurance. Who would have thought Sahara would be closed? Sahara was sponsor of Indian cricket team. Jet Airways would be closed. Okay, so there are future events which are never ever in my hand. Adverse event may affect the entity's ability to continue as going concern. Third, auditing procedure. I do audit with such state of mind that company has not done any fraud. Remember, audit and investigation are different. Investigation is done with a critical purpose to find out fraud. Audit is different. There are limitations on auditor's ability to get audit evidence. When I go for audit, I always believe management is perfect. I always believe there is nothing wrong done. There is a beautiful saying, auditor is a watchdog and not a bloodhound. What do you mean by the word watchdog? I am like a dog. I will keep smelling. If I find anything is fishy, I will go in detail. Okay, I will go very much in detail, but inherently I feel company is correct, company has not done anything wrong. And plus, if they do wrong, they will not tell me, sir, in purchase we have done wrong, or please check purchase in detail, we have done wrong, so don't let us escape, or please, no. Okay, especially if it's a fraud by management. Employee fraud still can be caught by management or auditor. But if management has done fraud, they will never ever tell you. And I do audit with what state of mind? Everything is correct. So what is written? There are limitations on auditors' ability to get evidence, because I believe everything is correct. And plus, if they have done fraud, they will not give me complete information. Similar point, not in nature of investigation. Okay, audit is not investigation. Investigation is done when there is a fraud. SEBI will tell, check creditors, check lenders. Okay, see, auditor cannot get absolute assurance that the financial statements are free from material misstatement. He doesn't have power of search, seizure, which are available with income tax officer. Okay, last point, timeliness of financial statement and relevance of information. Relevance, decrease in relevance of information over time. See, I want financial, I want things fast or slow. Okay, today there is deadline pressure, so I want maximum information in shortest time. If I want more information, there will be more cost, yes or no? On another side, I have to keep my audit also profitable. If I incur too much cost, there will be loss in audit. So tell me, on one side I want data very fast. If I want fast data, I need to incur more cost. On another side, I have to run my audit also properly. Audit should be a profitable engagement. So maintaining balance between the two is difficult. Let me explain again. See, we want more information early to get more benefit. But if you want more information due to deadline pressure, 15th April, we want our report to be ready. Okay, so we want more information, which will lead to more cost. And if we incur more cost, our engagement won't be profitable, audit engagement. So we need to maintain balance between benefit and cost. On one side, I need information fast, but in minimum cost. So in that minimum cost, whatever data I get, okay, I can never ever give complete assurance. I'll always give reasonable. Let's take parallel example. People say you should enjoy the life. Okay, 17 to 20 is a beautiful age. Have a girlfriend. Okay, go out with friends. This is the best age. But on another side, you have told me pass CA. So I'm not able to understand, shall I enjoy or shall I pass? I am not able to do both things. Balancing the two is little difficult. I hope you are clear. Okay. How do I remember this? Very simple. 4 question, 1 answer. Number 1, why do I give reasonable assurance? Why audit risk can never ever be zero? And one more question was there. Okay, why I give true and fair view and not true and correct? And last, what are limitations in audit? Auditor is fatty, fatty or fatty, whatever you want, fatty or fatty. Okay, auditor ki fatty or fatty, fatty. Okay, F, nature of financial reporting. One more F, future event. 2F, nature of financial reporting, future event. Nature of financial reporting, future event. Nature of financial reporting, future event. A, nature of auditing procedure. Nature of auditing procedure. T, timeliness of financial statement and decrease in relevance of information over time. With what it means, I want financial data fast, but the information importance will reduce over time. I need data fast but in less cost, so my audit is also profitable. Maintaining balance between information and cost is difficult. So timeliness of financial statement and decrease in relevance of information over time. I, not in nature of investigation, not in nature of investigation. Clear? Okay, you have to learn very nicely. What are limitations in the process of audit? Auditor ki fatty or fatty, whatever you want to say. Okay, what is F, nature of financial reporting. One more F, future events. A, what is A, nature of auditing procedure. T, timeliness of financial statement and decrease in relevance of information over time. I, not in nature of investigation. Learn nicely, your time starts now. Clear? If you are ready, we will start. Done? Chalo. What are inherent limitations in audit? Why auditor will always give reasonable assurance? Why auditor will give true and fair view? Auditor give fatty or fatty? Nature of financial reporting. Future events. What's A? Okay, nature of auditing procedure. Timeliness of financial statement and decrease in relevance of information over time. I, not in nature of investigation. Simply clear, fully super duper clear. Come here, I have only explained one word. To obtain reasonable assurance that the financial statement are free from material misstatement. Let me explain what is material. See, misstatement means mistake. Okay, let me explain mistake first. See here. Not in detail, but briefly you should know what is the meaning of misstatement. Come here, come here, come here, come here, come here. See, to obtain reasonable assurance, financial statements are free from material misstatement and prepared as per FRF. Let me explain first what is FRF. Financial Reporting Framework. Just break the words, okay? Financial statements are as per FRF. Financial Reporting Framework. Whatever financials are there, I will report, present it as per the framework. What is framework? Rules, regulation, policies, procedure to be used for preparation and presentation of financial statement. Framework is nothing but rules, regulation, policies, procedure used for preparation and presentation of financial statement. Who will decide these rules? Okay, basically depends on nature of entity and laws applicable. What is nature? What's your business and what are laws applicable? In India, all companies have to follow Schedule 3. So that's what FRF. Okay, banking company have to follow Banking Regulation Act, RBI Act. Insurance company, IRDA Act. Clear? So basically, what's the framework? That's rules, regulation, policies, procedure. Every family has certain rules. Same way, financial statement should be prepared as per FRF. Who will decide FRF? Your entity and laws applicable to that entity. What's your business and what laws are applicable? Example, in India, financial statement should be as per Schedule 3. That is what law is applicable. We have to follow AS. Understood? Okay. Now, what is misstatement? Very important word. Listen nicely. Come here. Very simple. Huh? If you don't learn, it's okay. Misstatement basically means mistake. What is state? State means to tell, to mention, to specify, to assert. Okay. What is misstate? Telling wrong. Okay. Wrong mistakes are misstatement. Basically, mistake is misstatement. But what is the exact definition? Misstatement is difference between CAP. What is CAP? Classification, amount, presentation and disclosure of a reported financial statement item, and classification, amount, presentation and disclosure required as per FRF. Okay, simple, did not understand. Slowly. What's the next? See, misstatement is difference between classification, amount, presentation and disclosure of a reported item, and classification, amount, presentation and disclosure required as per FRF. Means very simple. Let me take easy meaning. You have written this answer. Misstatement is difference between your answer and answer required as per ICAI suggested answer. Simple. So it's the difference between your answer and answer required as per ICAI suggested. Over. So misstatement is difference between classification. Catch the first word. What you have done? Scrap sale and normal sale you have included together. So sales have increased from 100 to 900 crore. But 800 crore is scrap sale. You need to mention separately. Other shareholder will believe that, oh my god, 8 times sale increase. Company doing very well. But you have done classification mistake. You have not shown scrap sales separately. Current and non-current you have to classify separately. Clear? Investments, asset, everything. What is the amount mistake? There was a sale of 1000 crore. You added 10,000 crore. Complete meaning changed. Class amount you changed. Purchase 1000 crore. You did how much crore? 100 crore. Then your profit is inflated by 900 damn crores. It's a mistake. Classification amount. Presentation. You did not show bad debts net. Okay. Debtors have to be showed net. You showed gross debtor. Opposite side bad debts you showed. Wrong. Nothing wrong you have done, but presentation is wrong. Okay. Discontinuing operation. One company is going to get closed. You are not showing separately. Shareholder will take decision thinking this is going to continue. Why don't you show you are going to sell this company? It's a discontinuing operation. You are going to close it. Okay. So very simple. Classification amount. Presentation is wrong. Okay. Classification amount. Presentation. Disclosure. Okay. 4 new court cases are there. You have not shown only. What if you will lose the case? You have to pay liability. Okay. So court cases you have not disclosed. Very bad. Related party. Okay. Related party transaction not shown separately. Though they are included, but you have to show separately is required as per AS 18. It is also a mistake. So mistake can be done in 4 forms. You don't have to learn but understand. Misstatement is difference between CAP. Classification, amount, presentation and disclosure. One more time. Classification, amount, presentation and disclosure of a reported financial statement item. And classification, amount, presentation and disclosure required as per FRF. FRF means what? Rules, regulation, etc. I hope you are clear. So now we are not concerned with all mistake. No, 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 no. Only material misstatement, it should not be there. What's material? Anything which can influence the decision of user. Now you will tell me, but what can influence the decision? Very nice question. It's usually 1% of sale. Okay, as of now. Detail it will come in chapter 3, but as of now 1%. So if my sale is 100 crore, 1% is 1 crore. Any mistake above 1 crore, if it is there, it's a material misstatement. I need to get assurance that the financial statements are free from material mistakes. Small mistakes, okay. But it should not exceed 1 crore, provided my sale is 100 crore. 1% of that, okay. Roughly, in detail, chapter 3. Number 1, to get reasonable assurance that the financial statements are free from material misstatement. You got assurance now? What you will do? What you will do with assurance? Report on the financial statement and communicate as per standard on auditing. Second objective is what? To report on the financial statement and communicate as per SA. Okay. So 2 objectives I have. Number 1, to get reasonable assurance. Number 2, to report on the financial statement and communicate as per what? Standard on auditing, as per SA. Okay. So there is SA which tells how to report. There are 4 types of report. This is the last introductory part. Okay. Come here. Very easy. After this, it will be very simple. Okay. Because your base will be clear. Start. Okay, what are 4 types of audit report? Unqualified, qualified, disclaimer, adverse. One more time. Let's hear it, guys. Unqualified, qualified, disclaimer, adverse. Unqualified, qualified, disclaimer, adverse. Unqualified, qualified, disclaimer, adverse. What's unqualified? See, qualified basically means person who is literate. Okay. Unqualified means not so literate. But second meaning of qualified is conditional. What's unqualified? Without any conditional. Financial statements are as per FRF. Everything is proper. Balance sheet, P&L, everything. Current asset, current liability, fixed asset. Mistakes might be there, but they are immaterial. So if financial statements are as per FRF, Schedule 3, AS, Companies Act, unqualified report. Clean report. Okay. Misstatements may be there, but they are immaterial. Second, if there are misstatements in one area, if misstatements are material but not pervasive. What is pervasive? Effect is not spread to multiple account, multiple assertion. What is assertion? I will explain in chapter 3. Effect is not in multiple account. Mistakes are there but only in debtor. Okay, it can be there. Then qualified. Qualified, why? It means conditional. Except debtor, all is good. Except debtor, all is good. Okay, debtor is wrong, understood. Except debtor, all is good. Example. I hope you understood. If this much water is green color, okay, this much water means other water is so perfect. No, it's white. Only this much. Misstatements are this much material, but they are not pervasive. They are not spread everywhere. Okay. If they are spread everywhere, then if the misstatements are both material and pervasive, effect is spread to multiple account, multiple assertion, okay, then it's adverse report, okay, because everything is wrong. Whole water adulterated, okay. If entire water is green, then it's adverse report. Current asset, current liability, fixed asset, borrowing, share capital, everything wrong. Adverse report. Misstatements are both material and pervasive. But sir, what if I don't get evidence in these? If I get evidence, one area mistake is there, it is qualified. If the mistake is in multiple area, effect is not limited to one account but multiple, then adverse. But if I don't get evidence of one area, like you can check everything but don't check this data, so I feel mistakes could be material but not pervasive. Why not pervasive? Only one area, no, still qualified, still qualified. But if they are saying, you go, they are like, books are with income tax, you're like, no, I want to audit, books are with GST authority, like, no, I want to audit, books are with custom department, means you are not able to audit only. So you believe misstatements could be material and pervasive, could be material and pervasive, because nothing you are able to audit. Then you will give disclaimer report. Disclaimer means, I was engaged to do audit but I couldn't do audit, I was engaged to do audit but I couldn't do audit. I hope you are clear. What are four types of report, guys? Unqualified, qualified, disclaimer, adverse. Unqualified, qualified, disclaimer, adverse. Very simple. If everything is perfect, unqualified, mistakes are there but they are only in one area, not multiple area, okay, then what will come? Qualified report. Or you couldn't get evidence only in one area. See, you get evidence or couldn't get evidence, but they are only material but not pervasive, then qualified will come. If you believe, or if you know mistakes are material but not pervasive, okay, if you believe they could be material but not pervasive, you did not get evidence, still qualified. But if you feel mistakes are material and pervasive, adverse. Could be material and pervasive, disclaimer. Many people, they feel always disclaimer will come if I don't get evidence. No, if I don't get evidence for one area, I cannot say I cannot give whole report. I will still give report, but except that area. Except that area. Okay, so qualified will come. If I don't get evidence in one area, qualified. I hope you are clear. Okay. Chalo, very simple. What are the objectives? To obtain reasonable assurance that the financial statements are free from material misstatement and prepared as per FRF. Second, you got assurance to report on financial statement and communicate as per SA. How many reports? 4. Unqualified, qualified, disclaimer, adverse. Read nicely. Clear? Super duper amazing, mind blowing, clear. Okay, shall we go ahead? Yes. Now we are actually starting. Okay. First question. Auditors should keep in mind following points to ensure my financial statements are not misleading. See, my financial statement has 5 parts: balance sheet, P&L, cash flow, statement of changes in equity, notes to accounts. They are not misleading. So I will check 6 things for that. How many things? 6. Number 1, accounts are as per entry from books of accounts. My accounts are as per the entry, but before entry what comes? Transaction. So based on transaction, I would have done what? Entry. Based on entry, my books of accounts are there. Very simple. Accounts are as per journal entry from books of accounts. Okay, so accounts are drawn up as per the entry from books of accounts. All entries are supported by sufficient and appropriate audit evidence. What is sufficient? Quantity. What's appropriate? Quality of evidence. Can you take some example? Example, I have done sales. There should be sufficient quantity of evidence sale has occurred. Example, purchase order will be there. I would have sent a quotation to him first. Then he would have given, the vendor would have given me what? Purchase order. Then I would have prepared an invoice. Then I would have a lorry receipt saying it is delivered. If this much document are there, quotation is there, purchase order is there, invoice is there, delivery receipt is there, I can say there is sufficient evidence. When will I say appropriate? Quality. Okay, if everything is matching, in purchase order rate is 32, in the invoice rate is 32, in the contract rate is 32, its quality of evidence is also good. So there should be appropriate evidence, sufficient quantity, appropriate quality. I hope you understood. Okay, in detail it will come in chapter 4. Third, none of the entries are omitted in the process of compilation, and nothing which is not in books has found its place in financial statement. None of the entries are omitted. Many times we omit purchase. Why? I will show purchase of this year, next year. Why? So my profit is more. If my expense reduce, profit will be more. No. None of the entries are omitted. Nothing which is not in books has found its place in financial statement. Sales are not in books, but I am including dummy sale. Why? To achieve certain target, companies do this. They want this amount of valuation. Okay, so they will show some dummy sale during year end. Okay, 2 point. Okay, none of the entries are omitted in the process of compilation. Don't omit. Nothing which is not in books has found its place in financial statement. Usually what I will omit? Expenses. And what I will include? Dummy sale. Very simple. None of the entries are omitted. Nothing which is not in the books has found its place in financial statement. Clear? Next, so first 3 points are done of entry. Now we'll come to statement. Information conveyed by statement is clear and unambiguous. Confusing should not be there. Okay, clearly sales and scrap sales should be shown separately. Okay, so unambiguous it should not be. Amount in financial statement is properly classified, described, disclosed. What's classified? Properly divide between current, non-current. Classified, described. For all entries, we should have a proper narration. Okay, and disclosures, AS1 disclosures are there, AS18 disclosures are there. Okay. Last, statement of account show true and fair view of operational results, P&L, asset, liability, balance sheet. Simple. Okay. So 3 point. Auditor should keep in mind following point to ensure my FS are not misleading. What is FS? Financial statement. Entry and statement. Entry and statement. What is entry? 3 points of entry, 3 points of statement. Only remember one, rest all will be easy. Accounts are drawn up with reference to entry from books of accounts. All the entries are supported by sufficient and appropriate audit evidence. None of the entries are omitted in the process of compilation. Nothing which is not in the books has found its place in financial statement. Learn first 3 points one more time. Accounts are drawn up as per entry from books of accounts. All entries are supported by sufficient and appropriate audit evidence. None of the entries are omitted in the process of compilation. Nothing which is not in books has found its place in financial statement. Learn nicely. 5-second break. First 3 point, entries. Clear? Chalo. Accounts are drawn up as per entry from books of accounts. All entries are supported by sufficient and appropriate audit evidence. None of the entries are omitted in the process of compilation. Nothing which is not in books has found its place in financial statement. Okay. Last 3. Information conveyed by statement is clear and unambiguous. What is inside the statement? Amount. Amount in financial statement are properly classified, described, disclosed. Last, statement of account show true and fair view of operational results and assets and liability. Very simple. Information conveyed by statement is clear and unambiguous. What is in the statement? Amount. Amount in the financial statement is properly classified, described, disclosed as per AS. And last, statement of account show true and fair view of operational results and assets and liabilities. Learn the last 3 points also. Done. Chalo, information conveyed by statement is clear and unambiguous. Amount in financial statement is properly classified, described, disclosed. Statement of account show true and fair view of operational results and assets and liability. Learn nicely. 1, 2, 3, start. Auditor should keep in mind following things to ensure financial statements are not misleading. Entry statement. Entry statement. Accounts are drawn up as per entry from books of accounts. All entries are supported by sufficient and appropriate audit evidence. None of the entries are omitted in the process of compilation, and nothing which is not in books has found its place in financial statement. Information conveyed by statement is clear and unambiguous. Amount in financial statement is properly classified, described, disclosed. Statement of accounts show true and fair view of operational results and assets and liabilities. Next question. Scope of audit. What does scope include? What it doesn't include? As a auditor, statutory auditor, what will I check? RAP I will check. RAP. Okay. Reliability and sufficiency of financial information. All information should be reliable and sufficient. Okay. So reliability and sufficiency auditor will check by assessing accounting system and internal control, carrying out test, inquiry and other procedure. Very simple. See, before checking any area, big four companies do what? What is big four? Top four companies in the world doing audit. ENY, KPMG, PwC, Deloitte. Those of you who don't know, I am an article of Ernst and Young. Okay. So if you learn our audit, of course, these are revision lectures. In no way substitute to regular or fast track. They are just love. If you attend our lectures, I think it will be the best world-class lectures are there. Okay. So if you like these lectures, do refer to your friends. Okay. They will get unparalleled conceptual clarity. Okay, go ahead. Okay. So how to check reliability and sufficiency? By making a study of accounting system and internal control. So I will check the system is perfect or not. Purchase. If the system is good, other things will be good only. See, always remember, first in big four, for any area, they check controls. If controls are good, then rest things are good. Let's take example. If parents are good, children are bound to be good. Because children are nothing but reflection of parents. So number one, check what? Accounting system, internal control. Based on that, test, inquiry, other procedure. If sale control are awesome, other procedure will be less. If sale controls are third class, other procedure will be more. Simple. Reliability and sufficiency of accounting records, financial information. Auditor assesses information in accounting data and so accounting record and source data is reliable and sufficient. What is source data? Vouchers. How to check? Number one, making a study of accounting system and internal control. Based on that, okay, carrying out test, inquiry, other procedure. Two, coverage of all aspect of entity relevant to financial statement. I will check everything, but only relevant to financial statement. Means asset, liability, income, expense. Asset is working properly or not. Employee is coming on time or not. Employee is working properly or not. That's not my concern. Coverage of all aspect of entity, but only relevant to financial statement. Come to third, proper disclosure of financial information. Auditor will see financial statement properly summarize the record, judgment used by the management, accounting policies are consistent or not. Basically two things here. Judgments, okay, already discussed. Useful life of asset, rate of depreciation, okay, method of depreciation. Judgments are proper. Accounting policy is used, method of depreciation, method of inventory valuation is proper. Okay, so in proper disclosure of financial information, what I will check? Okay, auditor will see financial statement properly summarize records and transaction. Second, judgment used by management are proper. Accounting policies are consistently applied or not. I hope you are clear. So what is included in the scope 3? RAP. What is included? RAP. Very simple. Reliability and sufficiency of financial information. A. Coverage of all aspect of entity relevant to financial statement. B. Proper disclosure of financial information. One last time. Scope of audit. What does it cover? Reliability and sufficiency of financial information. A. Coverage of all aspect of entity relevant to financial statement. Proper disclosure of financial information. Learn nicely. Small break, 20 seconds. Time up. Scope of audit. Okay, what will be covered in audit? Number one, R. Okay, reliability and sufficiency of financial information. A. Coverage of all aspect of entity relevant to financial statement. Proper disclosure of financial information. Clear? Yes, sir. Now come here. What is not included in audit? Auditor will not do things which fall outside the scope of his competence. Example, okay, coal mines are there. You cannot value coal mine. Okay, how will you go inside coal mine? Black body will come out. Okay, so I cannot do things which are outside my scope. Okay, inventory, if there's complicated gas inventory is there, how can I value gas? I am not champion in that field. Okay, actuarial valuation, PF, gratuity, these workings are done by actuary. So I will only do those things which are in my competence. Okay, continue. Auditor is not expert in authentication of document. You have to check this document is true or false. You cannot check. You are not forensic auditor. Okay, next. Audit is not alleged investigation into wrongdoing. See, audit and investigation are different. Investigation is critical examination of accounts when fraud is done. Audit is separate from that. Okay, auditor doesn't have powers of search and seizure. Okay, these are not available with auditor. We are not doing raid on someone. And whenever we do audit, we go with assumption everything is perfect. Okay, simple. Last question. Types of audit: compulsory, voluntary. Okay. So now compulsory for whom? Companies. Why? Public limited, okay, or private limited. Others' money is there. Second, banking company, trust. Okay. Insurance company, electricity company, banking, electricity, cooperative society. Public and charitable trust. Why? Because they are taking others' money. Okay. Trustees are there. Corporation under special act of parliament like ICAI. Specified entities under income tax act. Example, if your turnover goes above a particular limit, audit is compulsory. So shall be for whom compulsory? Companies act, banking company, electricity company, cooperative society, public and charitable trust. Corporations under special act of parliament. Specified entities under income tax act. For whom? Voluntary. Proprietor, partnership, HUF. Sole proprietor, partnership, little bigger than sole proprietor, partnership, HUF. Voluntary. If you want, you can do. Okay. Next. Advantages of audit. Okay. Nice question. Advantages. Okay. Why do I do audit? If someone tells you like that only, you can name 10 points. But we don't have to write like that. We have to write what is given in the book. Only then we get marks. Okay. Very simple. Audited accounts give high quality information. It gives confidence to user. Information on which he is relying is qualitative. Today, I want to buy shares of Tesla company. I know whatever Tesla tells, these are the sales. It is correct because auditor has told that it is correct. Okay. So audited accounts give that confidence to shareholder. Whatever information is there, it's true because auditor has checked. He has studied CA course and checked. He has checked everything is as per laws, rules, regulations. Second, it safeguards the interest of people who are not associated with management of company, that is shareholder. See, there are many people who are not doing management. They're like shareholder. Their interest is protected. Okay, because auditor will catch all fraud. It acts as a moral check on employee doing fraud. Tomorrow any employee can do fraud, but today he cannot do. Why? Because he knows there is a person called auditor. He will check if there is any fraud. He will catch him. Okay. Audited statements are of great help to government authority in settling liability for taxes. Today tax audit is there. CA will tell they have to pay this much tax. Okay. So have they paid the same tax or not? Audited statement will help. Audited statements are of great help to banker in deciding whether to give loan or not. See, today bank will tell what? Have you done audit? You say no, you will not get loan. If you have done audit, they will ask you for last 3 years. Plus projected financial statement also they ask. Okay, what are your projection for 3 years? Based on that, they give loan. But those projected statement have to be signed by CA. Okay, so it's a great help audited accounts for banks to decide. And once CA will certify, bank will trust much more than the management or the company. Audit helps in detecting error and fraud. Auditor reviews existence and operation of control, reports weakness in them. Auditor will check control exists and is operating properly or not. There are two things in control: exist and operate. Let me take example. Sometimes you are there in class, but you're not studying. You exist in the class, but you're not operating effectively. All invoice above 50,000 will be signed by purchase manager. It's a control. But really signing is happening or not? It's review. So auditor reviews existence and operation of control and reports weakness in the same. We have to learn this nicely. Let's start. What are advantages of doing audit? Can you tell me? Very, very simple. Audited statement provide high quality information. It gives confidence to user. Information on which is relying is qualitative. So Tesla, whoever uses the financial statement, they know everything is correct. Why? Auditor has told. Second, it safeguards the interest of people who are not associated with management. See, every shareholder cannot become management. Okay, so it safeguards interest of shareholders who are not working with company, but they know auditor will check everything. Third, acts as a moral check on employee doing fraud or defalcation. You have to learn this very nicely. Okay, first 3 point, 1, 2, 3. One more time, audited statement provide high quality information. It gives confidence to user. Information on which is relying is qualitative. Second, audited, it safeguards the interest of people who are not associated with management. Third, okay, acts as a moral check on employee doing fraud or defalcation. Learn nicely. Small break. 5 seconds. Then audited statement give high quality information. It gives confidence to user. Information on which is relying is qualitative. Okay. It safeguards the interest of people who are not associated with management, shareholder. It acts as a moral check on employee doing fraud or defalcation. Clear? One last time. Audited statement provide high quality information. It gives confidence to user. Information on which is relying is qualitative. It safeguards the interest of people who are not associated with management, shareholders. Okay. Last, acts as a moral check on employee doing fraud or defalcation. Come to next point. Okay, tax. They are of great help to government authority in settling liability for taxes, tax audit. They are a great help to banker in deciding whether to give loan or not. So government authority, bank, government authority, bank, government authority, bank. Last, help in detecting error fraud, help in detecting error fraud. Auditor reviews existence and operation of control, existence and operation of control, and reports weakness in the same, reports weakness in the same. Clear? Very simple. Learn nicely last four also. Break 5 seconds. Then 1, 2, 3, 4, 5. Listen nicely now. What are advantages of audit? Audited accounts provide high quality information. It gives confidence to user. Information on which is relying is a qualitative. It safeguards the financial interest of people who are not associated with the management. Third, it gives confidence. It acts as a moral check on employee doing fraud or defalcation. Okay, audited statements are of great help to government authority in settling liability for taxes. They are of great help to banker in deciding whether to give loan or not. It helps in detecting error and fraud. Auditor reviews existence and operation of control and reports weakness in the same. Shall we speak once all? Okay. Number one, audited statement give high quality information. Second, okay, safeguards interest of people who are not management. Acts as a moral check on employee doing fraud or defalcation. Government authority bank, government authority bank. Error fraud, and last, existence and operation of control. Clear? If you want last time we will speak advantage. Audited statement give high quality information. It gives confidence to user. Information on which is relying is qualitative. It safeguards the interest of people who are not associated with management, shareholder. Acts as a moral check on employee doing fraud or defalcation. Audited statement are of great help to government authority in settling liability for taxes. They are of great help to banker in deciding give loan or not. Audit helps in detecting error and fraud. Auditor reviews existence and operation of control and reports weakness in the same. Super duper clear. Now we have a very important question. I think it's the last question. After that, two time pass questions are there. So listen very nicely. If you want, you can take small break of 10 seconds. Because very important thing is starting. Very, very important. Last 15 minutes of lecture pending. For this chapter, very, very easy. But very, very much attention required. Only 15 minutes. Okay. So fully you should be devoted here. If you want, you can take break of 10 seconds. Start. Number one, who will prepare financial statement? Management. For whom they prepare? for the users. Who are user? Whoever starts from R. Debtor, creditor, auditor, partner, transporter, banker, shareholder, all people. So management is responsible party who will prepare financial statement, of course, as per the reporting framework, schedule 3, for whom? Intended user. Intended user. But users don't trust management. Why? If management will only prepare, management will manage business, management will only tell, user will not trust. Let's take your example. If you write paper and you only check, then so you feel you are brilliant from day one only. You feel today also you are chartered accountant. So there has to be a third person who will give assurance to the users that yes, everything is perfect. And that person is a practitioner. Who is that called? Practitioner. So practitioner give assurance to the user that management has prepared financial statement properly. I hope you understood. Three people. Responsible party who prepare financial statement, for whom? Intended user. But there is a person called practitioner, not auditor. What's the difference between auditor, practitioner? I will tell you. Practitioner is the person who gives assurance to the user that financial statements are prepared as per FRF or everything is proper. Now, continue the same story. Okay. Management doesn't know how to prepare many times. So they will appoint one person like chartered accountant. Chartered accountant will audit. Who said? They can also help management. They will help management in preparing financial statement, in doing consolidation, many times tax representation. There is a case on client, GST. So CA will go along with the client. Okay. Now he's not giving any assurance here. These are related service. Related service. On this SR applicable. In India, whenever you give related service, sir, give three example. Preparation of financial statement, in consolidation you are helping. Okay, you are helping client in tax representation. These are standards, related service. On these standards on related service are applicable. The number starts from 4,000 to 4699. 4,000 to 4699. Not in our syllabus, in CA final. Okay, one more time. Many times CA will help the client in preparing financial statement. Okay, why help? Because they need the help. These are related service. On these standards in India are SRS, standards on related service, starting from 4,000 to 4699. But there is one more CA, Prajakta. This is CA Apurva who is helping management. Who is Prajakta? Okay, Prajakta will check financial statements are prepared as per FRF. Prajakta will check financial statements are prepared as per what? FRF. What is FRF, guys? Financial Reporting Framework. Sir, why Apurva cannot check? Apurva is prepared? No. Apurva is from client side. If she will only check, what's the use? She will prepare, she will check. No. So, different person, independent person. They will check financial statement are as per FRF. This is Prajakta. Come here now. There are two basic services given by practitioner in India. What are two services? Assurance, non-assurance. In assurance, I will increase the confidence of users of financial statement. In non-assurance, I will just help the client, like accounting, like consolidation, like tax representation. What is assurance? Practitioner give assurance. Now, there are two types of assurance, historical and other than historical. What is historical? Whatever is prepared. Whichever financial statement are prepared are historical. What is other than historical? Prospective, future financial statement. Future, that's other than historical. Historical. On historical, listen very nicely, please, 5 minutes. On historical, I can never ever give absolute assurance. You will tell me why? Not possible, because limitations in audit. Fatty, you remember nature of financial reporting, future event, auditing procedure, timeliness, not in nature of investigation. I can never ever give absolute assurance. Why? Because limitation. Whenever I give reasonable assurance, what's historical? What is prepared? The prepared financial statement. Whatever management is prepared on that, whenever I give reasonable assurance, that process is called as audit. In audit, standards on auditing are applicable, and whenever audit is done, we don't call practitioner, we call auditor. Practitioner is broad, he will check everything, but auditor will only check audit. See here. Reasonable assurance. What is reasonable? High but not absolute. Absolute not possible, limitation. That is audit on audit SAR applicable. Essays start from 100 to 999, but it's okay if you don't remember numbers. These are standard numbers. Whenever any essay will be there, it will start from 100 till 999. Why? To ensure standard codification across the world. Okay, standard codes. I hope you understood. So on historical, whenever I give reasonable assurance, that is called audit. On this, standards on auditing are applicable. But sometimes on historical, I give limited assurance. What is limited? Okay, not as high as reasonable, not as high as moderate level of assurance. Why am I giving moderate? I should give reasonable only. Nice question. Limited review is there. Every 3 months in India, all the listed company have to do limited review. LR. Have you heard LR? Limited review. Compulsory every 3 months. AS25. Accounting Standard 25 interim financial reporting in India tells every quarter listed company have to publish interim financial reports. Okay, now in every 3 months I don't have that much time. In 10 days I have to give report. Can I do all procedure or limited procedure? Limited procedure. In limited procedure, what evidence I will get? Limited conclusion. In limited conclusion, what level of assurance I can give? Limited assurance. That is known as okay, review engagement. On these, standards on review engagement are there. They start from 2000 to 2699. Understand very nicely. On historical, if every quarter I do audit, if year-end audit I do, that is audit, because I will get reasonable assurance. I will do lot of procedure. But whenever I give limited assurance, why you are giving limited? Due to time. Every 3 months I have to do the audit. Compulsory in India. Okay, for listed company. Limited review. Why limited? Because I want limited conclusion. Why? Because I have limited time. So I will do limited procedure. That is known as review engagement. On this, standards on review engagement are there. SRE applicable in final, but intro is applicable here. SRE 2000 to 2699. Clear? Now come here. What is the difference between reasonable and limited assurance? Reasonable is a high level of assurance. Limited is moderate level of assurance. In reasonable, there are extensive procedure. Here we have fewer procedure. Here we get reasonable conclusion. Here we get limited conclusion, because we get limited procedure, so limited evidence. In 10 days, how much can I do? Standards on review engagement. So understand, both are historical. Both are historical. What's the difference? Here I get reasonable assurance. Here I get limited assurance. I hope you are clear. Super duper clear, sir. Come here. When I give other than historical financial statement, means projected financial statement on future, other than historical, I can never give reasonable assurance. Okay, why? It's future. Okay, absolute to impossible. Reasonable also I can never give its future. I will always give limited assurance. Okay, those are known as standards on assurance engagement. Why limited? Because for future. Here standards on assurance engagement are applicable. 3000 to 3699. 3000 to 3699. Example, for bank loan. Whoever wants a loan, they have to give projected financial statement for 5 years. One more time, what they have to give? Projected financial statement for how many years? 5. Okay, it's for future. I will always give not ever reasonable. I will give limited assurance only. Okay, budgets are there. Budgets I am approving. Okay, I am saying this budgets are true. That is future. On future, I will always give what? Limited assurance. Standards on assurance engagement are applicable. I hope you are clear. One last time I will summarize and nicely explain you. Okay. I forgot. On all these, standards on quality control are there. SQC 1 to 99. These are from 1 to 99. On everything, SQC is there. On all these, there are SQC, standards on quality control, from 1 to 99, out of which only one is issued, SQC 1. One last time. Okay. Number one, who is a practitioner, who does all this, but whoever does audit is an auditor. Okay, there are two kinds of service we give in India: assurance, non-assurance. Now first question you will ask me, what is non-assurance? I don't give assurance, I'm helping the client. Okay, helping to prepare financial statement, helping in consolidation, helping in tax representation. On this, standards on related service are there. SRS. What is their SRS? They start from 4000 to 4699. CFI. But whenever I give assurance, Whenever practitioner gives assurance to users of financial statement, divide into two parts: historical, other than historical. Historical, other than historical. Historical means whichever is prepared. I can never give absolute assurance. Why? Limitations of audit. Second, whenever I give reasonable assurance, that is known as audit. In this, which standard are there? 100 to 999. Whenever I give limited assurance, why limited? Because I have to give report fast. I will have to make limited conclusion. I have done limited procedure. This is known as a review. Every 3 months listed company audit is review. Standards on review engagement are there, 2000 to 2699. Here I get reasonable assurance. Here I get limited assurance. Here I form reasonable conclusion. Here I form limited conclusion. But other than historical means on future financial statement, projected report, budgets. Okay, I can never ever give reasonable assurance because future is not in my hand. I will always give limited assurance. So standards on assurance engagement are there. SAE 3000 to 3699. 3000 to 3699. Clear? Okay. On all this, SQC is applicable, standards on quality control. I hope you understood. This is most wonderful. Everything is done now. Now only 10 minutes. I just have to go through everything. Okay. Nothing great. Come here. Fast term fast. Assurance is the person who gives assurance to the user of financial statement. On historical financial statement, three types of assurance are there. Absolute, not possible. Reasonable assurance, whenever I give, that is audit, 100 to 999. Whenever I give limited assurance, that is known as review. Standards on review engagement, 2000 to 2699, because I am doing limited procedure and not full procedure. Lower level of assurance because fewer procedure. Yeah. Prospective financial statement, future. On future, I can never ever give complete assurance because future is in no one's hand. I will always give limited assurance. I will always give which? Limited assurance. Okay. 3000 to 3699. On all these, standards on quality control are there. Historical engagement, other than historical, okay, related service, all should be proper. SQC is there. Okay, standards on quality control, which will come in chapter 11. Last, many times I don't give assurance, I give other than assurance service, tax representation. On this, standards on related service are there. SRS 4000 to 4699. Our syllabus only audit is there, nothing else. Okay. Now come here, second best question. 100% it can come. What are elements of assurance engagement? Whenever there is any assurance engagement, how many elements are there? 5. Number 1, three-party relationship, which tells RIP, rest in peace. No. Responsible party, intended user, practitioner. Who is responsible party? Who prepare financial statement. Who is the user? For whom which we prepare financial statement. Who is practitioner? Who gives assurance. Simple. Read. Number 1 element is three-party relationship involving RIP, responsible party, intended user, practitioner. Practitioner is person who gives assurance. Responsible party is the person who prepare financial statement. Intended users are the user for whom it is prepared. Second, appropriate subject matter. What they will check? Financial statement. Information to be examined is subject matter. So what are elements in assurance engagement? Three-party relationship, appropriate subject matter. How they will check? As per suitable criteria. What is suitable criteria? Okay. What is suitable? Benchmark, which is used to check laws, rules, regulations, schedule 3. Our financial statements will be checked as per suitable criteria. Benchmark, which is used to check financial statement, laws, rules, regulations. Okay. By checking, what will I get? Sufficient and appropriate evidence. What's sufficient? Quantity. What's appropriate? Quality. Okay. So sufficient is quantity, appropriate is quality. Over. And last, everything will be in the form of written report, a written assurance report that conveys assurance about subject matter. Very simple. If you are not able to learn, in 1 second, I will make you learn. Tell me. What are elements of assurance engagement? What are elements of assurance engagement? Three-party relationship involving RIP, responsible party, intended user, practitioner. What I will check? Number 1, I will check the subject matter. How I will check? As per suitable criteria. What I will get? Sufficient and appropriate audit evidence. How will I write their evidence? Written assurance report. Over. Learn nicely. One more time. What are elements of assurance engagement? 3 times I will speak. One time done. 2 more times. 3-party relationship involving RIP. Responsible party, intended user, practitioner. What we will do? Check the subject matter. How we will check? Suitable criteria. After that, what we will get? Sufficient and appropriate evidence. What we will do? Written assurance report. Small break, 10 seconds. Read. Done? Chalo, 1, 2, 3, start. Tell me what are elements of assurance engagement? 5. Number 1, a three-party relationship involving RIP, responsible party, intended user, practitioner. What they will do? Check subject matter. How they will check? As per suitable criteria. What they will get? Sufficient and appropriate evidence. What they will do? Written assurance report. Clear? See, audit and review difference is what? Audit is of course done at year end. I will get sufficient and appropriate evidence. I will do extensive procedure. Review is of course done every 3 months. I will get limited conclusion. Review is limited assurance. It gives lower level of assurance. Further, review involves limited procedure and gathers limited. Audit and review both are historical. But when I do every 3 months, that's review. Limited conclusion, limited procedure. Audit year end, extensive procedure, reasonable assurance. Over. Almost over, guys. Last 2 questions. See this. Relationship of audit with other subject. Tell me, is audit related with other subjects also? Yes, of course. How is audit related with accounts? You tell me. See, auditor reviews the accounting financial statements which are prepared as accounting process. Auditor should have knowledge of AS. Okay, when you prepare financial statement, you have to check whether AS are followed or not. So if auditor doesn't have knowledge of AS, how will he work? So auditor reviews financial statement which are nothing but as a result of accounting process. So auditor should have knowledge of accounts. Second, should he have knowledge of law? Yes. Auditor should have knowledge of all the law, Companies Act, this act. By you have to check compliance, related party disclosure. So law also. Third, should he have knowledge of economics? Yes, overall economic environment, market value of the asset, macroeconomic variable. Okay, so accounting, law, economics, stats, and behavior science. Why? Many times client is lying. Okay, when you look at his face, he's not giving you data because they have done fraud. So behavior science, because we have to deal with a lot of human beings while getting the data. So I should have knowledge of behavior science also. Statistic and maths. I don't do full audit. I do sampling. But for doing sampling, I should have knowledge of sampling. That's statistics knowledge. Okay. Auditor should have knowledge of statistical sample for arriving at conclusions. Okay. Data processing. Today, auditor should have knowledge of IT also. Every company is using data today. Amazon, Flipkart, look at the way data is generated. Data is the new oxygen of 21st century. Okay, gone are the days you will do normal audit. In Amazon, if you go, okay, I want to check all invoices. Please give me. Amazon will say we don't have, everything is in computer. But I to check invoice like this only. Are that you and your dad will check. Okay. What you have to do these days, things have changed. You should have knowledge of computer. We have to go inside the system to see is there any fraud. If Amazon, you check one voucher, it's impossible to check one voucher in Amazon. If you keep on checking, years will pass. Amazon has 100 crore voucher. How will you check one? So what to check? You have to go inside the system. Check controls are proper. If control is good, be it 1 voucher or 10 crore, everything will be proper. So auditor should have knowledge of computers, EDP, electronic data processing. How things are done in computer. Banks, you cannot check one transaction in bank. You have to go and check the system of bank. If system is good, everything is good. Hope you understood. EDP audit is a discipline in itself. So auditor should have knowledge of computer. FM, you need to have knowledge of ratios, working capital, capital budgeting. Okay, for analytical procedure chapter. Analytical procedure is checking ratios. Okay, so that. Production also knowledge we should have, production, cost, system, etc. How to remember? Relationship of audit with other subjects, okay, other discipline. Auditor is what? Checking. So you should have knowledge of everything to become auditor. That is why CAs will learn this many subjects. So we can do audit nicely, okay. Relationship of audit with other subjects. So name all foundation subjects. How many subjects are there in foundation? Four. All four. Audit and accounts, audit and law, audit and eco, audit and maths. Over. Audit and accounts, audit and law, audit and economics, audit and stats and maths. Subject names I told. Now tell me, which other subject I teach? India's best faculty, I. Okay, I teach which other? FM. Okay, so of course we'll write audit and FM. See here. Audit and financial management. EIS, audit and data processing, audit and data processing. Subject names you have to write. CA Foundation, four subjects very quickly. Okay, audit and accounts, audit and law, audit and one more, audit and accounts, audit and law, audit and third, stats and maths, audit and eco. Okay, one more, audit and FM. Okay, then which other subject? Audit only I teach. Okay, FM, SM is not given, but SM is what? Maybe economics. Economics is also behavior science. You can say SM is mainly behavior science. So behavior science. Okay, data processing production. Data processing production. Clear? Very simple. I think you will be able to do it. Okay, electronic data processing and production. One last time, audit and uh, accounts, audit and law, audit and eco, audit and maths and stat, audit and FM, audit and production, audit and electronic data processing. Okay, and last, audit and behavior science, because we have to get data from others. Come here. Why standards are needed? Okay, why do we need these standards? SQC, SRE, SAE, SRS, all this. They ensure good quality of audit, improve the quality of financial reporting. Okay, so number one, audit quality will improve, quality of financial reporting will also improve. Okay, improve audit quality, improve quality of financial reporting. Equip the accountant with professional knowledge and skill. All accountant will be updated with best skill and best knowledge if they have standards knowledge. Okay, equip accountant. Standard help to carry out audit as per global practice. Help to carry out audit is provide uniformity in audit of financial statement is carried out. Uniformity in audit. Okay, all audits of India will be done in proper manner. Uniformity in audit is standards are there. And global audit or Indian audit will be done properly. Standards are there. This is global. Help in carrying out audit as per global practice. Provide uniformity in audit as all are following the standards. Okay, so global audit, India. India also all audit will be done in same way. Global audit also, because standards are common worldwide. Okay, so very simple. Tell me why standards are needed. Ensure audit quality, improve quality of financial reporting, equip professional accountant with necessary with professional knowledge and skill. Remember first 3 points. Ensure audit quality, improve quality of financial reporting, equip the professional accountant with specialized skill and knowledge. Remember this much. Tell me with standard what will happen? My audit quality will be good. Improve the quality of financial reporting will also be good. Okay. All the people, all the CA, equip professional accountant with professional knowledge and skill. Help in carrying out audit as per global standard and practice. Help in carrying out audit as per. Okay. Uniformity in the audit is carried out using the standard. Uniformity in audit. Indian audits uniformity will be there. Simple. Let's speak 2 times. It should be very easy. Why standards are needed? Number one, ensure audit quality, improve the quality of financial reporting. Okay. Third, equip professional accountant with professional knowledge and skill. Helps in carrying out audit as per global standard and practices. Provide uniformity in audit of financial statement as audit is done using standards. Clear? Okay. So Indian audits are done properly. Global audits are there. Very simple. Last time lead, small break 10 seconds. Okay, 1, 2, 3. Why standards are needed? Ensure audit quality, improve the quality of financial reporting. Okay, third, equip professional accountant with professional knowledge and skill. Okay, helps in carrying out the audit as per global standard and the best practices. Okay, helps in carrying out the audit as helps in uniformity in the audit, as audit is carried out using the standards. Clear? Okay, last time, helps in ensuring audit quality. Second, improve the quality of financial reporting. Third, equip professional accountant with professional knowledge and skill. Okay, last 2 point, helps in carrying out audit as per global standards and practices, provides uniformity in the audit as audit is done using the standards. Okay, I hope you are clear. Okay, we have put in a lot of hard work. If you like this lecture, do press a like button to give us much more motivation, much more enthusiasm. We can work even more harder if you are liking the lecture. If you put in a nice comment, okay, it will give us extra motivation, extra dose of energy to make the chapters even better, even simpler, and even more hard work we will do. Thank you so much for appreciating. If you like, do share with your friends too. Bye bye. Good night. See you until next video. Thank you.